All right, guys. What is going on? What is Gucci gang? Hope you guys had a good weekend. Let me know if you guys had a good weekend by dropping a 1 into the chat, man. Drop a 1 into the chat. If you guys had a good weekend. We have, let's see. Sheesh, 14 people, all-time highs, man. 18 now. Nice. Is everybody sleeping in today or what? Is everybody sleeping in or what? What is going on? You know, that's all I want to know. I just want to know what is good, what is going on. You know, that's it. So, what's good? Naruto, Ebernith, MJ, Capitalist, Eric, Marshall, Tordy, Z, 2020, Jorks, Robin, Ebernith, Patch. Yeah, chat is members only today. So that is that. And as much as I wanted to long Dow today, I did not. I didn't trust the laggard to catch up. So I let it go. You know what I mean? I let it go. But we can talk about it. We'll take a look at a few things, you know. This continuation, right? This expansion during lunch is seen on ES. It is seen on NQ. And Dow is like, I will have no part of it. So, you know, that's, again, another reason why I don't like trading laggards, because this is what they do. They will get in sync, but it's just almost always better to trade the leader instead. You know, bigger moves, faster moves, more sustained moves versus this tomfoolery that we're seeing on Dow. So, yeah, what'd you guys do this weekend? Let me know. I got in some books. I'm actually gonna buy some more probably today. So, I shared those on my book page, The Wall Shelf. I briefly talked about reading in episode 7 of Corvette Conversations on my Instagram. You know? So, let me know if you guys read this weekend. And if you did, let me know what you're reading. I'm reading right now a book which, let me see. I'm 72 pages in. It's called The Dispossessed by Ursula Le Guin. See that? The Dispossessed by Ursula Le Guin. So it's definitely different. It's definitely not like your average self-help book, you know, do this, do that, XYZ list kind of thing. It's novels are different, which they can be a little bit difficult because the English language is tough. You know, understanding metaphors and the time that this book was written and the state of the world at that time, it can be, you might miss a lot of the details, but overall it's not bad. So, none of you are reading anything in the chat? Oh, there we go, Marshall. Stillness is the key. Nearly finished it. Yeah. That one. I don't remember what year I got that one. but I do remember getting it. I really enjoyed it. And when I was giving out book recommendations many years ago, like say 3 years ago, um, some of the best feedback I got was from Stillness is the Key. Like, if you were to ask me, hey, John, you know, out of all the books that you recommended, like, what's the best one or whatever, I can't really choose that, you know, but if it was based on feedback from students, it would be Stillness is the Key. I was actually rereading that one last week a little bit, the chapter on limiting your inputs. So it's definitely a good one, and it's definitely one of the ones that you want to reread and that you want to go back to every once in a while. And yes, this is regular trading hours. You'd be able to tell from these gaps, but yes, we are in regular trading hours, mainly because I was focused on our weekend gap, and I am focused on Friday's high, which is why I set up in here in Discord that YM is catching up, and it still looks like that, but it's just been doing nothing for 2 hours. We built like some trailing stops here, probably. We did make a new high of day here, but I don't think it's done. Read 50 pages or so of trading in the zone last night. Hope to finish it before the end of the week. What did you learn, Patch? What did you learn from those 50 pages of trading in the zone? Naruto read some of the Bible. Wonderful. Discourses and selected writings by Epictetus and the teachings of Rumi. I don't know who Rumi is, but I have seen people quote Rumi before. So I feel like they are popular, but I've never read any of their work. It sounds like an old philosopher or something. But I really don't know who that is, but I have heard the name before. Going to pick up Stillness is the Key this weekend. You don't have Stillness already, dude? Fired. Been reading your next 5 moves. Yeah, Patrick Bet David is solid. And I like his painting, that custom painting he had, or he has in his office. It's that big ass thing of Aristotle and Marcus Aurelius, and I think MLK Jr.'s in there, and some other people are in there. That's pretty cool. Yeah, I've also heard of that, the Bhagavad Gita, but I've never looked into it. So there's too much to read. You know, I can only read so much before your eyes just fall out. You know what I mean? They just fall out like one of those Halloween cheap costume things, you know? So it happens. Um anyway, I don't know what to talk about today, chat. I never go into streams really with an idea. We kind of just freestyle here, but I guess let me ask you this. Have you guys been looking at, I know Cameron has and some others, have you guys been looking at price grading, and not just of ranges, but have you been grading concepts as well? Have you guys been looking into that at all? So if you don't know, if you don't know what I'm talking about, price grading, you could say range grading, concept grading. It's where you do this, okay? Like, for example, I have Friday's close and today's open, right? And this gap here is our weekend gap, basically, in the regular trading hours, not in electronic. This is in regular trading hours, right? And they added this feature very recently. If you want to, you can extend that to the right, which is actually pretty decent. But what I've done here, right, it's just a simple fib tool, okay, that has just the normal, or sorry, not the normal. It has the 50%, the 25%, and the 75% quarter levels, right? That's it. 50, like 25, 50, 75. And of course, 1 and 0. And that's all it does, okay? There's no special math or nothing like that. And whether you draw it from high to low or low to high, the only thing that's going to change is 75 and 25. But who cares? Well, I guess one's a premium, one's a discount if you'd like. But even if we did it backwards, where the 75 was at the low end and 25 was at the high end, you would still understand this is the upper half of the upper half and this is the lower half of the lower half. You get me? But have you guys been doing that or no? I know there's a lot to study here. There's time, there's concepts, there's market maker models, there's entry techniques, you know, inversion. Like there's so much stuff, and I know, but I just have to know. I have to know. Okay, so coming back to what I asked about trading in the zone and what you learn in those 50 pages, Patch says the difference between the profitable and unprofitable traders is more so the mindset and confidence to win rather than being the trader that's very good at analyzing but is still fearful. Yeah, that is a very good thing. So you could be you know, pretty solid, right? And but if you don't take trades, you won't make money. If you under leverage, you won't make as much money. You know what I mean? Versus someone who might be, you know, halfway decent. You know, they still don't understand like which imbalance to use and time of day. They still don't get it. But as long as you're trading towards liquidity and you're managing risk, someone who does have confidence and proper risk management is more likely going to do better than the person who can analyze better and even predict price better, but struggles with that execution or maybe a little bit of the money management side and the patient side too. So yeah, that is definitely a thing. What's good, Harmon? Mark, H, anybody else that I missed earlier? That or you're just late? Not recently been studying that specifically, but it was something I studied some months back. So, well, let me ask you this. Do you find it beneficial? Or do you find it confusing? Or, you know, like what's your feedback, chat? Like do you think it's stupid? Do you think it means something, or is it too much? Analysis, oh John, this is too much bullshit, you know. It's too much, John. What's good, Lamont? So let me give you an easy example. Today, right? And I was watching this, and I again, I really wanted to execute, and I didn't. You know, I was just like, it's the laggard, and I just wasn't willing to put real money on it, so I did not. But as I was watching it, though, it was on the 1 minute and 5 minute, and the 9 o'clock hour is here, right? So we get the open of 9. That is definitely noteworthy. Right, so we have 9 to 10. I'm pretty sure, again, we do have an indicator that does this, but I don't know. I just feel like doing this. It's fine. And I meant to say 9. Clearly, I'm not awake, chat. Okay. So we have the open of 9 a.m. We do trade immediately lower. And we trade right into a 1 minute mitigation. And the 5 minute, although we do not reach the bodies, it only reaches this upper wick. Right? Now, I don't know what you're going to think about this, but when I was watching this, okay, and we immediately traded off of it, the next candle at 9:05, to me, again, it's just my opinion, but to me, that's a long. Now, what would also add some confluence to that idea? Now, mind you, we've already, right, we made a low at 8, lower low during equities open, rallied higher, you know, break of structure, for those of you that like that for whatever reason. We have our 1 minute mitigation, yes, but also, okay, look here. You see that? That 25 is right there. We got to take that. Extend, that's too much. That is too much. You see that? Just highlighting, it's not a box for the sake of being a box. It's just an annotation tool saying, like, look, the 25% grade of our weekend gap in regular trading hours, shit, right, is right there. And so, I mean, just look at that for a minute. You know what I'm saying? Like, you would think that someone who teaches concepts, right? You know, down candles, up candles, imbalances, inversions, XYZ, XYZ. Very rarely do I see people that are so immersed with concepts actually come out of that and basically use this instead. This is very similar to the lazy traders model. You guys remember that? Where when you have a range and we cross 50%, or like we cross 25%, that 25% becomes, right, a long stop at 0. And, you know, the 25% is a perfect 1 to 3 for a new high, right? Or like the 50% stop at 25, you know, is a perfect 1 to 2, right? Like that's the lazy traders model, because it's not based on time and it's not based on any concepts. It's quite literally lazy, but it's pretty accurate. You know what I mean? It ain't gonna give you sniper entries. You'll take drawdown, but you know, it works. And I feel like when you do learn concepts and you learn precision, you probably look at this and you may not love it right away in the same way that you probably have learned to enjoy a concept, you know, like a mitigation or an imbalance, right? Typically people have a favorite. My favorite is this, my favorite is that. You know what I mean? But it's, to me, it's just, it's a logic, you know? You have your regular trading hours gap, and we've already traded, you know what I'm saying, the majority of, or about half of this entire range here, and then we come back into a discount. You know what I mean? Like, look at that. Look how we respect this 25% level here and here and here. Like, you can't deny something like that. You know what I mean? Now, what adds to that though is also like the rest of this. Okay? Do you remember that drawing? I want to keep this up here for just a second. Do you guys remember this drawing that I did for you. You probably didn't screenshot it because you hate me. But you guys remember this? And then we had taken this a little bit further, and we had said that every up move here, right, would be traded through and then back into it, through it, back into it to go higher. You guys remember that? Something like this? Yes or no in the chat. You guys remember that? Something like that. I know what some of you are thinking. There's 55 of you on here. Someone out there is going to go, yeah, John, I remember that. That's just old support, new resistance, or old resistance turn support. Again, that's what it looks like. And that is surface level thinking. You know what I mean? That's surface level. But we go and we look further. We get more details, right? So remember this idea here. I don't know what it's called. I didn't invent this. There's a name for it. I shit you not. I don't know what it is. Okay? I don't know what this idea depiction is. I know of it. I don't know what it's called. Okay? I'm not gonna, make some shit up and just be like, we'll call it this. No. So when you look in here, right? Does that 25% level overlap with anything? Look at that. You have this series of up candles. Now, mind you, we didn't take any, highs or nothing like that. That's fine. But these up candles here, right? Look at that. Utilized to go lower. So what was once bearish becomes bullish on the right side of the curve. We got our sell side price delivery. Now we're at buy side price delivery. See that? You see how that works, chat? But my point is, do you see how price grading could be useful? Do you see how these concepts all connect like a puzzle, and they're all going to point in the same direction? They're all going to point to the same thing. Does that make sense? These ideas, the same ideas, right? Like stuff like this, where it's very similar to the market maker buy model. It's just, it lacks details. Okay. Kind of like Wyckoff. Sorry. I had to throw that in there. I know some people are going to get fucking mad, but it's funny. Okay. And it's true. And this is why we can have some general roadmaps and some general outlines. Yes, we love those, and there's nothing wrong with that. But it lacks specifics. There's no time elements here. There's some elements of price, but there's really no context either. But when you take your knowledge, right, you take the ideas that I give you, that others have given you, you put them together and you say, okay, what was once bearish can become bullish. We are below the open of 9 a.m. We are at a discount relative to the regular trading hours weekend gap. We are also in a discount relevant or in reference to the entire range here. We crossed 50%, so we're back in a discount. So by however many measurements, we're in a discount. You know what I mean? We've already traded below equities open, right? We'll go back to regular trading hours here for a second because we're fixing to smack that buy side, right? Yeah, I was gonna throw in a joke, but I'll keep it civil because we've already talked a lot of shit so far today. But your 1229. Friday's buy side. There it is. There it is, baby. Live price in advance. Okay. So back to what I was saying. We opened lower. So we opened in a discount. We traded below Friday's AM, I believe. Thursday's lunch as well, right? So we took not last week's low, but we took some lows from last week. So we opened in a discount, continued into a discount. Below equities is an extreme discount, right? Below the gap is an extreme discount. So now, once we had traded higher, by all means, this was the opportunity to thus go higher. But do you see how that works? We can grade here. I'm going to keep this one here. We can grade gaps. We can grade, we haven't done that yet. We will, but concepts. And we can grade ranges. You see what I'm saying? And it's also interesting that half of the range and half of the gap are both very close to each other. So I probably wouldn't write that down, but I would say that definitely might be important for future reference. So discount of the range, discount of the gap, and watch this. All right, we'll do a little bit more studies. If we'll take we'll just take everything off. Those two right here. See that? That is the mitigation on the 1 minute time frame. We can grade that too. Body to body. You see that? Now price doesn't hit 25%. Doesn't hit anything else either. That right there is a heavy indication of bullishness. In the same way, when we look at the breakaway imbalance, you remember that one? The first imbalance in a reversal typically is left open, or if it is traded into, it leaves the lower half open. You remember that? Same thing here. We can't even get halfway. It barely trades into it. That's very bullish. We could also argue that we have an imbalance right here too. See that? Same idea. How, I'm going to pick my words carefully here because I'm immature. How far, does price trade into this imbalance? Just like the mitigation, it can't even see halfway. It can't even get halfway. That's bullish. That's very bullish. Right? And then, so what do we see? Like I've already shown you. Expansion. We get a very annoying, but not unheard of consolidation during lunch. And then it was in here. I was saying, yeah, Dow's catching up. And then I would consider time distortion. And then we get the PM session. Boom. And then we rally up. You see how that works, dude? Do you see why it's not that difficult? You know what I'm saying? Like once you get these ideas, it's not that difficult. Find the liquidity, trade in that direction. And that's it. I mean, it's quite literally that simple. If you can't buy below the open, which is ideal, you can buy right after or a little bit later. You know what I mean? Let me ask you this. I'm coming with more questions than you guys today. Do you remember last week? I don't know what day it was, but do you remember we looked at, I don't know if it was NQ or ES, but we looked at shorts and then, yeah, because it was a sell model. And do you remember how we took the RR tool and we measured the low risk short and we measured like the first stage distribution and then the second stage distribution? Do you remember how we did that for each one and how we could frame, oh, this was a 1 to 4.8, this was a 1 to 3, here's another 1 to 3, and then a couple 1 to 2s. Do you guys remember that? Drop some twos in the chat if you guys remember that. Now, my question for you is, did you go into your charts this weekend and did you actually go look at that stuff? Because we could do the same thing here. I don't want to keep doing it for you. You're never going to learn it if I always do it for you. But years and years and years of doing stuff like this, okay? Just imagine where you're going to be in 2 years. You know what I mean? Some of you have been here for 2 months, a year, maybe since the beginning. And you can already tell where you started from and where you are today. And right now, just imagine the next 2 to 3 years after that. I mean, you've already seen me take how many perfect trades this year? And that's just, I'm just one person. You know, there's not very many mentors that can show you a perfect trade, much less like fucking 6 of them. Oh, that's, damn, John, you're always with the arrogant shit. No, that's just what I've done. And I've showed it to you multiple times. Right. And I'm telling you, you can do the same shit. You can do the same stuff. Okay. Now, I don't really like anything down here. I don't. But what would be something low risk, high reward from this particular mitigation? Well, on the 5-minute, I was probably going to look down here, to be honest. But given the mitigation and imbalance overlap, I would say the entry would probably be that, you know, like right at the high end of both. I would say if you want to frame ultra small risk, I'd go with this because it's below the mitigation, and then you actually have like another imbalance here, and it may go to the low end of that. Or if you wanted to be a little bit more conservative, it could go to the low end of that, which would be here. Now, the only issue with that is we would need at least a 1 to 3. So if we're going to aim for Friday's high, or we could even say previous day high because Friday is previous day to Monday, then we would need something like this. That, yeah, that gives us plenty above a 1 to 3. And that's not including like the 50 level right above it, which is 750, which we got just a couple minutes ago. The next 50 level above a high, which you guys know that's how I do it. And that's a perfect 1 to 4. See that? And we'll leave that there. So you do have that. Now, you may not, actually, let's go back to the 5. You may not have liked doing something like that. So you have a few different options here. If you wanted to long the next candle, right? If the stop were to be the same, we can measure that. That's a 1 to 2.3. So I would say, yeah, the RR, it waters down a little bit unless you were to tighten the risk. Let's say below the mitigation. Yeah, that's going to give you a little bit higher. But I would say, I probably should have said this last week. I would say what I'm comfortable with when it comes to having tight stop losses is going to be stuff like Nasdaq from last week. I think it was Thursday. Like turtle soup, right? We get an old low, we get a low below that, and then we get another lower low, right? We get that turtle soup. I don't mind going really small risk on that because the probabilities of going down again, like a 1, 2, 3 formation below an old low, is unlikely. It can happen, but it's unlikely, especially when we reference ES and stuff like that, in which I did. That I don't mind going very, very small risk. When you start trading after like the initial move and you're looking at a retracement here, you have to be careful going super small risk, because you're going to have situations where, let's say this short-term low like that, that short-term low here might get taken, meaning they might come back for trailing stops. They might revisit that mitigation and then take off. You know what I mean? And one of the worst feelings for, in my opinion, a beginner to intermediate trader, especially when you start taking good trades, is getting knocked out and then seeing the market take off. It's one of the worst, like, internal, emotional, you know, egotistic, we could call it egotistical as well, to see that. You guys not agree? Like getting stopped out and then going, okay, well, maybe I'm wrong. And then it just rockets after that. And you go, gosh, dude, that is, that is something else. That's kind of what I'm referring to. So you got to be careful. But we'll say low end of the mitigation after, like, we see that it's being respected. Does that make sense? So we'll go with the low end of that. That gives us a little over a 1 to 3. Now, everything up in here, that honestly, that is a little bit more difficult to frame low risk, high reward. I guess if I had to pick something, it would most likely either be a, let's actually take this off for now. I mean, you guys saw the RRs. You don't really need that in here anymore. This would be hard to justify for me personally, but I'll give it to you anyway. You know, just because why hold back, right? You guys know how consolidations work, okay? If we're going to have a sell model, and I'm not saying this is that, and I'm definitely not saying to short at all-time highs today. If anything, I told you the opposite like a dozen times the last 2 weeks. This is not an environment you want to pick the high of the market in. We've done it in the past. I wrote about it. It's in my book. We've done it. I'm sure we'll do it again. Today's not that day. Okay? Tomorrow probably won't be either. All right? If this were to be a sell model, I don't think it will be. But when we have a consolidation and then we leave it and trade back into it, right? And then we start taking off, yeah, that's heavy indication that we're going to continue higher. So I would say these down candles there is an opportunity at 1140 and 1205. I would argue is the better opportunity, because now you're not inside of lunch. To me, you're in like the PM session, and that's a little bit better times versus something like this. Oh, we made a new high, go break even, get out break even, and the market goes up, and you're like, all right, this is bullshit. What John teaches is bullshit. I don't think so. So what would be the RR on that? It would be trash. Either one of those, okay? If it was at the low end of the consolidation, aiming for that 50 level, yeah, it's probably 1 to 1.5 at best. So unless your risk was jammed to like that low, and I don't see why you would do that. Half of the consolidation, I don't see why anybody would do that. But at least, again, at a minimum, there was quite a few opportunities in here. All right. And that doesn't even include the price grading that we've done earlier. So 1, mitigation. We could say 2, the imbalance, right? The mitigation model. Number 3 would be right after that, so like the next candle at 9:05, so we could say that's 3 opportunities. And then fourth one is here. And this is why we talked about price grading today, because I didn't know what else to talk about, and this was honestly all that I really watched today. Price grading. That 25% level there could be one, or that revisit a little bit later. That could be one. Right? So longing something like that right at the 25. And again, I know some people are going to be out there whispering under their breath, this is fucking stupid, or why would anybody do that, or whatever. And I'll remind you, who's the one that's taken many perfect trades this year? That's all I'm going to say. Okay, that's all I'm going to say. You don't have to listen to me. You can listen to anybody you want to. Okay? Your perfect 1 to 3 is off that 25. See that? Just like the lazy traders model. Now, you may not like that stop. You may think, well, it's, you know, it could still come back in that mitigation or whatever. Okay, well, on this 5-minute time frame, we do have a lower imbalance here, but we have a large imbalance like that. We could put the stop at the low end of that and still target a new high of day and that 50 level, because that's the next one, the next 0 level at a new high. 1, 2, 3.3. See? Mitigation, model, imbalance. Both of those were on the 1-minute time frame. That I'm not talking about this one right here. That could be 3, I guess, if you wanted. Next candle entry would be 3. That 25% level could be 4. Right? So that's at least 3 or 4 different opportunities to go higher. So drop some 3s in the chat if you guys like this kind of stuff. Do you guys like this kind of teaching or no? Because, I mean, like, out of all of the things that I teach, okay, I love teaching the concepts. I love saying, like, oh, look at this and look at halfway of that, and look at the overlap of the two, right? Like, oh, we have an inversion, but then we have this that overlaps with it. Like, boom, like that shit's phenomenal. You know what I mean? I love that. And I like putting that stuff out there. Oh, new high of day or equal highs, equal lows, whatever. That's the target. Bam, 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 bam. Right. What time of day is it? You know, and all that funny shit. But I guess I really don't go over RR or maybe like the opportunities all that much. Maybe that's a mistake on my part. Maybe. I mean, I don't know. But I don't know what it's like to watch me on the other end. You know what I mean? I'm the one that's presenting, you know, my screen, my chart, and I'm talking to you. I don't know what it's like to be on the other side. But do you like when we throw on the RR tool here to say, like, well, this was an opportunity, or the imbalance was an opportunity, or the mitigation was an opportunity? You know, where would the stop be? Why would we target this? You know, all that type of shit. You guys like that stuff? Because I'm telling you, man, I did not get stuff like this. I had to learn the hard way, the long way, trial and error way. I wasted a lot of time. A lot of time. You know what I mean? It was not fun. But now that I do know this stuff, I try to present it to you in a way that's like, okay, I'll cut out all the bullshit. I won't try to rant too much. But, you know, I want to show them the good stuff, the stuff that I did not have. Because it's one thing to understand concepts, but it's another thing to understand the opportunities. And it's an entirely different thing to actually execute on those ideas. You know what I mean? Every idea I don't execute on. Hell, I watched it do that. I watched it. I was like, yeah, it's probably a next candle entry. It came back to 25. I watched it and went, well, we're at the quarter level. We'll see if we trade higher, or, or we don't. And then I watched it moon like that, and I go, oh, fuck. Well, all right, probably a new high of day then. Maybe not right now, but yeah, it's probably going to make a new high of day. That's why I said Dow's going to catch up. And then we eventually did catch up after lunch after this time distortion. But like I always say, every trade you see is not worth taking. I could watch, I wasn't up in front of the charts right at equities open, but I could have watched this whole thing and not traded. I could have said, all right, we're at Friday's low. We're at Thursday's AM intraday low or some shit. We're at some, relatively important lows. Okay, like how do we react? How do we respond? Oh, that's a fractal low. Next candle entry. Nope, didn't take it. Imbalance. Oh, respected. Nope, didn't take it. Like I can just sit there all day and go, yep, that's it, that's it, that's it, that's it, and not take a fucking one. Because not every trade is worth putting money on. And I stand by that. It allows for better practice. I personally try to recite moves you show off memory in my own charts, etc. I often miss key things that you point out that are aidful. Look, I'll tell you this. If there's one thing that really boosted my results and really boosted my confidence to execute, or at least like a willingness to execute, is the very things that I'm showing you here. You might not get the low. You might not get right after it, but a little bit later is still okay. And that's like, listen, if you, I don't have this playlist, but if you went back and you looked at every trade that I've recorded for you, or even the ones I didn't record, like last week, that I at least showed you the entry and exit on. If someone came in not knowing anything and they looked at all those entries and exits, they wouldn't have a fucking clue. How did he do this? How did he do that? How did he know it was going higher? Well, it was already going higher, and then it went down a little bit, and then he bought it, and then it kept going higher. Like, oh, well, why does this trade over here have a deep retracement, but this one over here only has a shallow retracement? Like, how do you know if it's going to be a shallow retracement or a deep retracement? How do you know if it's going to go higher or lower? And they're going to be so confused, and they're not going to know. But I've shown you trades at the low, trades right after the low, trades around 25%. I've shown you trades around 50%. And I've shown you trades even at 75% or a little bit higher that still went and hit TP. I've shown you trades at maybe not every, but if there was 100 opportunities right in here, I've shown you probably 90 of them. You know what I mean? Because, again, let me come back to my point here is what gave me the confidence, right? Like what boosted my results, okay, was that understanding. I always wanted to get the low, kind of like Nasdaq from Thursday, right? I fucking love nailing the low or right after it. Beautiful. But we may not always get that. Entering a little bit later is still okay. You can still take good trades. You might like 1 to 5 and 1 to 6 or whatever and higher. You might, 1 to 3 is stupid. No, it's not. 1 to 3 is not stupid at all. Absolutely not. 1 to 3 is nice. Now, I would say trying to go for 1 to 1s all the time, that might be a little shaky because now it's going to fall on your win rate versus having a good, 1 to 3 or higher. Your win rate can suffer a little bit because you're going to make more than you lose on average. You know what I mean? So it's having that understanding that I don't need the low or right after it. I can still get in a little bit later at a mitigation. What manipulates typically mitigates. I mean, where do you think that came from? Well, that came from so-and-so. That came from me. Because I looked at it enough times to go low, high, lower, low. Well, that's manipulation. And there's a mitigation there. That's quite literally what qualifies a mitigation is manipulation. And it's like, well, fuck, the names rhyme. Okay, what manipulates typically mitigates. Well, that's easy to remember, isn't it? Nursery kindergarten level, you know, rhyming here. But it's key to remember. What manipulates typically mitigates. So it's almost like you can, I've said this before too, it's almost like you can anticipate that this is going to be a mitigation even when it's down here. You already know what it's going to do before it does it. The same way that I tell you what price is going to go before it gets there. The same fucking way. If you were to watch that and you go, okay, we got some up candles. All right, you know, what's going on? What's going on? Boom, we slam lower. It's like, oh, well, shit. Low, high, lower, low. We got some nice beefy up candles here. That may be a mitigation. But I need to wait for a little bit more information. I wasn't trying to rhyme that, by the way. But my rap skills are, you know, naturally given. Okay. I don't really care for this down candle, but in hindsight, shift in the state of delivery, we could, you know, watch that and go, okay, well, let's see how price responds. Boom, we get sent off of it. Okay, well, shit, that's probably the low. Now we need to focus on, you know, getting in or waiting. This looks like shit to me on a 1 minute time frame. It's Dow Jones. It's typically ass anyway. So it's like, okay, well, maybe this is the low. Maybe that is going to be a mitigation. And you could just long here in the anticipation that this will be. Or you could say, well, there's no entry here, so let me just not do anything. Well, that's 850, right? Oh, 850. I wonder what the fuck that is. 850. Huh. I don't know. Could be nothing. Could be nothing. 850. Whew, higher. Retracement. Phew, higher. And we just so happen to retrace at 910. Ah. Yeah. Supply and demand right here. Supply and demand right there. So you could say, all right, we trade through that. And if you watch that whole debacle, then you know, okay, now we're going to see if that's a mitigation. Boom, trades right down there. That's the long. Boom. In the same way, I think it was a couple weeks ago. And, or no. This was last week. In the example that I showed you where we were taking the RR tool and drawing them out, right, on like 5 or 6 opportunities, and one of them was based off of an X candle entry, and I was saying, like, look, this is still a good trade because the price you're getting is inside of that mitigation, even though that mitigation has not been traded through yet. You're basically trading the mitigation before it gets disrespected. And I've told you time and time again, you can do that. You do not have to wait for a mitigation to be traded through before trading it. If you think that's a mitigation and we're prices in that and you anticipate we're going to break through that and come back into it, you can trade prior to that. Not financial advice. Don't trade with money you can't afford to lose. Okay. But you can say, okay, well, if that's going to be mitigation and we're right at the low end of it, I now have an opportunity to buy at the low end of it, because if it is bullish, it may not come back to the discount end of it. I don't think you even caught what I just told you. I don't even think you caught what I just told you. Some of you might not like it. You might not agree. You might, no, this is stupid. This is stupid. That's fine. That's fine. I don't like every technique out there anyway. You know what I mean? So we're in the same boat. That's fine. But look at that. That 25% level is the discount end of this mitigation. Need not trade through. And guess what? It never came back down there. And that's one way of trading a discount end of a concept, by trading it before it gets disrespected. Again, it's just a lot of people will not think outside the box. They will not think about that because they've always been taught differently. Wait for the break of structure. Wait for the down candles to be traded through. Wait for this, wait for that. And yeah, I've taught a lot of that stuff too. But I've also said for years that you don't need that. You can trade a concept before it gets traded through. But again, listen to whoever you want. I'm not going to beg you to learn this. I'm not going to beg you to learn this, chat. So now that we've taken the high, now that we've got this ugly consolidation with all these lows in here, that's probably going to see a run on that. I wouldn't be surprised. And see, this is the shit I'm talking about. This is exactly the shit I'm talking about. We get a retracement on Dow, right? We can all agree drops like 50, 60 points. We get a retracement on Dow. We look at ES, very minimal. We look at NQ, very minimal. Almost no retracement at all. But yet Dow, the weakest one, is like relatively stronger pullback. It's crazy. But anyway, hopefully you guys learned something today. I know some of this stuff can be weird at first. It was weird to me too. I didn't get it at first either. But, you know, you got to study it. You got to learn it if it's something that you want to learn. I don't know who the fuck is calling me right now. I'll call him back. That's the only time people ever call me or text me is right when I'm streaming. Never fails. Anyway, Mark, on this concept, on a 10-minute chart, there's a great 50% prior fair value gap fill. I don't even know what that means. Fill algo long entry? I don't know what that means. I couldn't even tell you the last time I looked at a 10-minute chart either. It's been probably like 5 years since I pulled up a 10-minute chart. I'll tell you what though, Mark, you're a member here, so why don't you just post it in the Discord and I'll look at it. I retired the 10-minute, I retired the 30-minute a long time ago. But see, that's my point though, right? Like I don't look at a 10-minute chart, but you're looking at it and you're going, okay, price is respecting this, price is respecting that. That's good to know. That's good to journal. We can start fine-tuning some of these entries or start fine-tuning some of the stops, or like we talked about recently, fine-tuning some of the trailing stops. Your stops, I'll give you one more idea. Okay. Are you guys good with that? Drop some fours in the chat if you want. One more quick idea before we hop off the stream. You guys want one more idea? Do you want one more idea, chat? I don't have to give it to you. I don't have to. I don't have to do anything, really. I mean, the market reviews, yeah. But I'm not obligated to do anything here. Okay. When you have a concept, okay, that you believe is going to be respected, we've talked about stop loss placement in the past. If you long, I usually long the high end of it. Okay. Now, why do I do that? I do that because the reasoning, the logic behind it is, number one, I want to be in the trade. I want to be in the trade. Number two, price does not always dip where you want it to go. And I saw this a lot in the MLM industry too. Whose fault is that? Maybe it's mine. Maybe it's others. Maybe it's both. But we're doing the best that we can. Okay. A lot of people, that's what they started to do. They would learn, okay, well, we have some down candles. All right, well, I'm going to put, my entry at like the halfway or some shit, right? They're like, oh yeah, I'm going to put my entry at 50%. And then what inevitably happens, they don't get filled. So they're placing limit orders, limit sells, limit buys, and they just never get filled. And then they get into my inbox and I'm like, well, what the fuck, man? I'm predicting price, you know, I want it to go higher, it goes higher. I put the orders in, but I never seem to get filled. Price doesn't come down. Every once in a while they will, right? But it's like majority of the time they don't get filled. Their limit just stays open, and then the market takes off, and then they have to cancel their limit order and go, okay, well, I don't know what to do now. I'll just move on. Right. Because you are asking for too much. You're asking for too deep of a retracement. And in bullish markets, it's not going to give that to you. So here's the last little gem you'll get for today. I usually enter at the high end of concepts because even if it trades to 50%, I just want to be in the trade. I want to be in the trade because if it's high probability, right? If it's something that I want to put risk on, I don't mind getting in a couple ticks early. Not a big deal, right? Now, I've always taught you that there's different stop loss placement ideas. If you believe this imbalance will be respected, then the low end, we have like a no pants candle down here, but it can go to the low end of that, right? So stop loss could go there. And that's relatively, you know, I wouldn't say safe, but that's relatively not bad. Because again, like I said, the market would have to trade all the way down here. It'd have to go through this imbalance. It'd have to go through that mitigation we saw here. It'd have to go through that inversion, you know, to get like 90% of the way back down here after it's already cleared some old lows. It's unlikely to do that. Okay. Now, you can also, what I typically want to do when I tighten the stops is I go to the low end of it. I go to the low end of the concept that I believe is going to hold. Okay. For trailing stops, because I wouldn't move your stop right away, but for trailing stops, these quarter levels, okay, that 75%, that'd be a good trailing stop. You see what I mean? I would be, after we start to take off like here, like once we get a nice move like that, I'd already be break even. Okay. But these grades in here, they can be decent, either stop loss placements initially or ideally like trailing stops. You get what I'm saying? Now, why would that be advantageous and why would that be probable? Questions you don't ask, but you need to. This, if we've already framed, okay, an idea. What was that level up here? 20 something and 50, 750. Okay. If we've already outlined a nice RR, okay, and we put 1% on that, and then price, you know, starts to respect whatever that we're looking at. And by you taking your stop at original, let's say 1% risk, by moving it to 50%, right? You've now cut your risk in half. You were already okay with risking 1%. And now we can take that and cut it in half. If you had $100 of risk, now we can cut that down to 50 almost immediately. To me, that's good risk management. You may not agree. That's fine. I think decreasing risk is pretty solid, personally. I like losing small. I don't like losing a lot. You know what I mean? So I still remember the first time I lost a few grand. I was sick, bro. I was not hungry for like 2 days. I was like, this sucks. This sucks. But there's a right way to manage risk, and there's a wrong way to do it, you know? So trailing stops or even original stops don't have to go to the low end, you know, or the far all the way at the fucking low. They can go to the low end of concepts, or even I would say like the 75% level. Okay. If you go and you backtest this idea, just tell me what you find, right? Go back and look at all the mitigations, go look at all the imbalances, go look at all of the inversions. You know, you're going to find that the 75% level almost never gets traded into. There will be times where it does. There are times where Price trades to the low end of it, but the bodies respect it, and then it takes off. You will see that. You will see that. But I don't know what the number is, but I'd say there's a lot more times where it leaves 75% open versus hitting 75%. Okay? So that's all that I got for you today. I feel like we went with a pretty decent stream today. I didn't know where we were going to go, but this is where we ended up. I feel pretty good about it. What do you guys think? You guys feel pretty good about today's stream or what? Drop some 5s in the chat if you guys enjoyed today. If you learned something, if you liked it, we got 25 likes. You know, let me know. That's all that I ask. So yeah. Entries can be refined. Stops can be refined. Trailing stops can be refined. But if you're going to try to have super tight stops, you have to realize you're playing a dangerous game. You are. The closer your stop is to the live market, the more likely it is to be hit. Okay? There are times where, yeah, you can have ultra tight risk. Sure. But based on my experience, the moment you start trying to have super tight stops, that's when you're going to start getting stopped out and the market going your direction because you mismanaged the stop loss. You didn't put it in the right spot, or you entered too early and now you have to have, you know, a super wide stop and you don't like that. So you try to minimize it and then you get yanked. So yes, there are ways to do things, but you have to realize this stuff really does involve risk. And you want to be comfortable with that. You don't want to be stupid, right? You have to be methodical, okay? And careful. So if you want to trade on a demo account, if you want to take normal trades, right? And then you want to have like, you want to take that, you want to mirror that same trade on a demo account with a super tight stop. I don't see what's wrong with that. See how that works, you know? Maybe you get stopped out on demo, but your real trade, you know, is good. And you go, oh shit, well, glad I didn't have that stupid ass stop loss. I would have got wrecked. You know? I don't know. But I've given you a lot of things to study, a lot of things to consider, you know? Just study this stuff, man. You don't have to trade this way right away. Right? Don't hop off the stream and go, okay, well, now I know how to price grade and I'm going to take this imbalance with a stop at the high end. Don't do that. Don't do that. Never try to implement what you just learned in the same day or the next day. Okay? Spend time with the idea. You have to get the experience of seeing it over and over again. The same way I show you macros over and over again. The same way I show you these same ideas over and over again. So you get the repetition, so you can get the understanding and the experience. Right? So with that, y'all be good. Be blessed. We'll be here same time, same place tomorrow on Tuesday the 23rd for another always free live stream. Y'all be good. And see you tomorrow. Go read a book.